So now we get to the final step in our 6-step process of developing a daily trade plan to put our strategy into action. And this step is all about developing different market scenarios based on if-then thinking, if-then analysis. All right? So what we're going to be doing is taking a look at everything you've prepared so far, the context and the key reference areas and all the different things that have prepared you, and thinking, okay, if this happens, it would mean this, and this is how I'll trade it. If that happens, it would mean that, and this is how I'll trade it. Okay? And the easiest way to teach you this is to jump in to our live market scenario that we've been building up and show you exactly how I would do it. So let's jump into that. Okay, so here we are in the charts back to our live market example. And now that we've done all our contextual analysis, we've highlighted all the important support and resistance zones, key reference areas, moving into the day, we've checked the calendar, we know our current ATR, and we've checked out the current conditions we have that tell us whether we're likely to trend or not. And now we can look at scenarios, okay, based on all of that. So as a very quick review, we know that as we're heading into the trading of today, we are in a large term uptrend. However, we are in an intermediate term downtrend as things have recently broken down, most recently with this major gap that took us out of the big balance area. But we know that we're hitting major big time frame support. Okay? So on the one hand, we have the shorter term picture, intermediate term as bearish. On the other hand, we're hitting major support in a bullish longer term picture. Okay? So those two are kind of fighting it out. All right? We know that coming into today, we have a major economic release in the pre-market, nothing major after that, and then later in the week, some major market moving releases. We know our 10-day ATR is around 16 points, so that has been the average range for the last 10 days or so. We know in terms of conditions for trend, we are in a mature balance in this time frame. All right. We don't have volatility contraction in the last day. This wasn't a very tight small day, so that condition's not met. We are currently set to gap down a decent amount lower to the extreme of this balance, gapping down away from all this previous value, so that condition is met. Again, we have a market moving announcement before the open that could change value perception, so that condition is met. And in terms of the general volatility environment, nothing major there. We've been in a balance before for about a month and now another balance. So we have about 3 out of the 5 conditions that for potential trend days met. We have the mature balance, the market moving release, and the sizable gap away from value. So the odds are pretty good that we could trend on this particular day. So we have that in the back of our mind first, okay? And we also have in the back of our mind the big picture context of testing this major bullish zone in a bigger uptrend, but coming in the context of a shorter term downtrend. So we have all of that to work with. Now, based on all of that, we create scenarios. And the scenarios will be influenced by those odds of all of this analysis. All right? So how would we be thinking here? Well, given what we know right now, we know that we're gapping down to around here. Okay? So here's what we're thinking. Here's the first scenario. We think if we break down out of this balance area, okay, and we don't quickly reject it back up, there are good odds that we could be having a trend day down, since there are pretty decent conditions setting up for a potential trend day soon, and we'd be moving away from this balance area. There would be decent odds that, if we break down in the morning, we don't quickly reject it and go right back in, and we kind of hold below this general area, there's good odds that we could trend down, and we might want to look pretty early on for try to get on the trend, on board of it, to the short side. It would be telling us that the bears are now in control and we should be leaning short. That would be our bias. And it would be telling us that given everything else, it could be a trend day down, so we'd want to try to get on board a trend and ride it down. Now there's one little caveat here, which is the fact that we are in a bigger term uptrend, and this support zone is actually a bit bigger. It stretches down to about 1390 like we had seen before. So let me zoom out and show you that on a daily chart. Okay, so here we are on a daily chart, and as you see, even though we had this confluence where we had the green line, where we had, the middle part of this high volume node, we had the previous resistance that we had broken through, and we had this launching point, and which is why we drew these green lines along with the bottom of the current balance area. In reality, this high volume node, stretches down to about 1390. It's pretty thick, and this is the thickest part down here, so we haven't actually reached that. We tested it close to it, down to 93 in the overnight session at time before, but we hadn't completely reached that. So given that, and given the fact that, this is still a bigger term uptrend, here we zoom out again. This is still a bigger term uptrend. There are decent odds that even if we do break down and start moving downwards, once we hit this final part of the support zone, of this larger support zone, we could hold there and reject back up, so we don't actually get a pure downtrend day. So we do have to keep that in mind. And this is a thing about trading. There's no clear things like simple if then, A equals B, if this happens, that happens. It's not that simple. There's always if this and this, then you get this. But if this and that, there's always more to it than just simple linear thinking. It's more non-linear. It's more complex analysis. And this is how you have to train your mind to think. Don't be afraid of the fact that there's complex thinking involved. Don't think it's a bad thing. Trust me, it's a good thing. If it was too simple, it would be too easy and all this reward potential wouldn't be there. So appreciate the fact that it's hard. Be happy about that, okay? And realize that with practice, you'll be able to get much, much better at this. Each day you do this kind of analysis. At the end of the day, you'll review it, you'll see where you were right, where you went wrong, and you'll get better pretty quickly, especially with all this foundations and all this framework that we've given you. We had to, as traders, develop this ourselves over the years, learning from many different people, learning from our own experience through years and years of hard work. While you're pretty much getting all this in a very structured manner, all of our years of learning distilled to you into the most basic stuff in a very structured manner. Now, that doesn't mean you're just going to take it and do simple if then A equals B and then bam, you're profitable. That's not how it works, but you will have a much faster learning curve starting at this point. And with time and practice, you'll get better at this. And there's always going to be competing points of view, and there's going to be this ambiguity and uncertainty around it, and that's part of it. Don't try to reject the uncertainty, right? Don't try to avoid it. Welcome it, and just get used to living with it. Get comfortable thinking with uncertainty surrounding all your reads, because there's always going to be uncertainty. You're never going to be sure what exactly will happen. Okay? So having said that, let's jump back into the 5-minute charts and move forward with our analysis. Alright, so back we are. Now, as we said, if we're opening here and we break down, there could be decent odds of a downtrend day, but we have to temper that with the fact, like we just showed, that the support zone actually stretches down lower and we still have a bigger term uptrend. At that point, you might be thinking to yourself, so how do I know how to trade? Well, that's why it's all about odds and probabilities. At that point, basically, I'll give you an example. If this thing opens here and starts breaking down, you just have to weigh what you think are the better odds, right? If it does start breaking down and you get a good chance to get in a good trade location, and we'll talk about those in the tactics and execution part. If it gives you that good opportunity, despite the fact that you very well know that this thing could only be looking like a trend, even if everything's pointing to it, but then hit that major support zone and reverse back up, despite that, you might be thinking, well, this is a good risk-reward trade. And I'm not trying to avoid losses like we discussed extensively in the trading framework section. We went deep into those, the probability type thinking and understanding how to actually look at losses. You would just take the trade. As simple as that. If you got a good trade location, you have good reward to risk, even though you very well know that this could be wrong and it could end up reversing, you would still take the trade. Why? Because it could be right. And it could turn out into a big downtrend day and just break through that support and be a huge trade, right? And you have to be thinking in long-term probabilities, which is that if I took 100 of these exact type trades, yes, some of them would fail, but if I had good trade location, good reward to risk, overall, I'm going to end up ahead. That's how you have to be thinking. And we'll get into that more. I'll keep pressing this point and kind of drilling it into your mind as we get more into the setups and the execution and all that. So getting back to our scenarios. So the first scenario is if we open and break down here and hold, good chance for a downtrend, all right? Tempered with the fact that there is still good support below, so it might end up reversing and coming back into the balance area, but you still would want to try to get on board the trend if you got good trade location at that point, all right? It would be telling you, at least for the short-term time frame, the bears are in control until you see anything proving otherwise. Now, if we were to open up here and test down and quickly reject this, try to go through and quickly reject this is our second scenario, instead of just going right through, then we got to be thinking, okay, we're rejecting the downside, we reject it sharply. We have to be thinking that, okay, responsive buyers are still active in this area. They don't want to let this market go down. And we have to be naturally thinking that the good odds are for a move back all the way to close the gap. Okay, because that's the real next resistance point. And in general, the way you got to be thinking about these scenarios is, okay, if I break a good support resistance zone, the odds are that I will move to the next one. You're thinking as if you are the market. If the market breaks this zone, the odds are it'll move to the next one. And if it holds a specific zone, for instance here, if it tries to break this and can't, the odds are that it'll rotate back towards the next zone, because before hitting the next zone, there's not much to stop it. There's not much opposing action from the other side. There will always be opposing action. That's why it moves in series of waves. But we're talking about where is the most opposing action, and that's going to be at these zones. So again, your next scenario is if we try to break down but can't, we reject it, we're going to move at least back up to here and probably start re-rotating back into it. Okay. Then you go, okay, what if we open here and we don't even try to go down, we just start rotating within here. If we don't try to test this to the bottom, then the odds of any directional conviction move become lower, because there's no real control that's taking at that point from one side or the other. All right. See, if we break through and we hold, the bears have taken control. If we try to break through and we can't hold, the bulls are in control, and they're probably going to move extensively higher, testing at least this, and then if they move through this, potentially going to break out to the other side. But if we open and we don't test one side or the other, and we're just kind of going sideways, more than likely the day is not going to develop any sort of trend, right? No side will really have taken control. We'll probably just stay within this balance area for yet another day. Okay? And then finally, you got to be thinking, okay, what if we, open up here, test down, reject it, start flying higher, and actually get through? Well, then you got to be thinking, okay, you're going to have these major ones coming up next. If you get through this one, all right, the previous day's high, then the odds are pretty good that you're going to go test the highs of the whole balance area here. And if we break through those, even though we're hitting this resistance, at that point, you're thinking this thing was looking like it was gapping down lower, right? Rejected the whole bottom and just flying higher right through these. This could be a major breakout to the other side. And you would probably want to be getting on board that if you're seeing this. Okay? So this is how you have to train your mind to think in scenarios. And each day is going to be different, and this is going to take you time to develop how to do this, but stick to it. Think in scenarios. You're always thinking who's in control and where are they in control. Here, if we break down, the bears would be in control. If we try to break down rejected, the bulls will be in control. They'll take us to the next level. If we try to break out, the buyers, the bulls are in control, and they'll probably take us through and potentially have a major trend. However, if we try to break out here above this, the whole balance, and we fail, that means responsive sellers have entered. They're probably going to take us and rotate us back all the way down to the high volume node of this balance area once again. Okay, so just because you move through an area, like here at Zoom, we come here. Let's say we were opening up here, all right, at 07 or 08 or something, and we take off and we move through this area. We go above 1675, so now we're above the whole balance area. Well, just because we just moved above it, it doesn't mean it's a valid breakout. It has to actually hold above it. If we quickly get a rejection, we can't hold above it. It's very likely to go back all the way down, as now all these who bought are stuck. They have to sell their positions and will likely retest at least the middle part of this balance back here. Okay, so that's how you have to be thinking in terms of bull bear zones. If we break above this zone, this side is in control. If we break below, that side in control. If we try and reject, we'll probably rotate back down, to the middle part or to the previous zone we broke. Right? That's how you have to be thinking. And you have to also be thinking, what are you predominantly going to try to do? Again, in this example, because the odds are pretty decent that we will likely have a trend day given all the conditions, you have to be foremost thinking, if I start seeing the signs of a trend, I am going to try to get on board. If it's to the downside, I will get short and try to get on board if I get good trade location. If it's to the upside, like if we reject here and go straight back up, then I'll try to get on board that trend to the upside and ride it potentially for a breakout above here. Now, if the context was different and the odds of a trending move were lower, okay, we didn't have a mature balance, we didn't have market moving news, those other things weren't there, we didn't have a major gap, then you would still be doing scenarios, but you would now be approaching them more from the sense of, okay, which areas am I going to fade? Not which trend am I going to get on board, because you're thinking likely that any directional move is probably going to fail, is not going to turn out to be a trend, right? So then you would be thinking, okay, if we get to this resistance zone, I'm going to sell. If we get to this support zone, I'm going to buy, right? You would be fading the key reference areas. Whereas now, because there's good potential for trend, if we get to this support zone, you're not necessarily going to buy. You're going to see, is it going to break through it? In that case, I'll get on board the trend. And another day, if there wasn't the trend potential, you might not believe a move so much that tries to get through it. You might be almost expecting failure because the odds of trend are low, right? So you'd be looking for that more. Whereas now, you would be watching, yes, what if it does fail, but you would be more trusting of it if it starts moving through it. All right, this is how all this preparation, all these scenarios, and the general strategy give you a basis for trading. I know I've covered a lot of stuff in here, but in the key takeaways, I'll break it down for you in a bit more structure, and you'll be able to review it and just kind of have some key principles to take away to help you do your scenarios better, to help you practice doing them. All right, but in general, this is it. This is our 6-step process, and This is the difference between trading like a professional, like a pro, and trading like most traders. Most traders have no clue about the overall context. They're not thinking if thens. What are most traders doing? Most traders are waiting for a setup, waiting for a pattern, going, okay, this looks good. Clueless about the big picture, clueless about what buyers and sellers are really doing, clueless about the key reference areas, clueless about the volatility, about the chance of having a trend versus a non-trend. It's just like, oh, it's a setup. It says buy it. It says sell it. You're not going to make money like that. Okay, so I hope you see the value in all of this. This is how the professionals think about the markets. And even if their specific strategy isn't exactly like ours, their thinking style will almost inevitably be like ours. You have to think contextually to really have an edge in the markets. Okay? So I hope you take the 6-step process, start putting it into use every day, take all the key takeaways, take the major points, drill them into your mind, set yourself up with a specific routine to go through this every day, practice over and over, watch these videos again to get different insights. And the more work you'll put into this, the faster you will improve. It took us, years to develop this on our own. Here you're being given everything in terms of best practices distilled all in one structured manner. So now you can take it and get very good at it pretty quickly if you dedicate yourself.